Well, hello everyone in Wall Street Silver. We have a very special guest with us today. We have Lobo Tiggre. He is the founder and CEO of IndependentSpeculator.com. Welcome to the Wall Street Silver Forum here, Lobo.
I have been watching this Wall Street Silver phenomenon since, the unwelcoming boot at Wall Street Bets. I think it's fantastic to see this thing going, and I'm really happy to be able to, jump in here and greet the community and hopefully provide some help and insights if I can.
So you had a recent article that about a lot of the topics our audience cares about. That's what we wanted to dig in with you today. In your recent article, you were discussing manipulation of gold and silver markets and how you believe it's more on a small scale and not really part of some big grand conspiracy. And I wanted you to sort of share your point of view on that topic with our audience.
Actually, I'm not walking that back, but I would correct that a little bit. I'm not saying that I believe it's only on a small scale. I think it's proven, or it's evident. The evidence amply substantiates that belief, right? We can see it happen. The tons of silver dropped in the wee hours, that there is no explanation for that other than trying to push the price down. It's pretty strong logic. The larger belief of a cabal among central bankers to control and suppress the prices of silver and gold, it's something I can believe. It's something as a libertarian makes perfect sense to me, but it is not something that I believe is proven. So I'm not saying it's not true. I'm saying it's not demonstrated that it is true. And this may seem like an academic difference. Who cares? If you think it's true or you think it's likely true, why make this distinction? But I think it's important to understand the difference between what you suspect and what you know. And particularly, we're not just sitting around as a debate club and having an intellectual conversation on political philosophy or theory. We're investors, we're speculators, we're looking to make money in these markets. And I think it is dangerous to make financial decisions based on suppositions or slogans or, hooray for our side kind of thinking, as opposed to sticking to what we know.
When JP Morgan, they had like the $920 million fine recently that was largely for spoofing within their metals desk and was referred to as a criminal conspiracy by the government. There's a lot of questions about, all right, how far up the chain of command did that go really at JP Morgan? Or was it just some rogue, mid-level director people who were doing that? Most of us would consider JP Morgan being at the top of the precious metals market to be, pretty solid evidence that it's a big deal. There's something big going on there. It's not just a little bit of manipulation.
I think it's a really good example to bring up because, personally, this is kind of a pet peeve of mine. I'm trying to have a rational conversation about prices of gold, silver, or other things, and we're looking at the trends in the marketplace. We're looking what correlates, what doesn't, and somebody jumps in. It was like all these comments on the YouTube. Manipulation. JP Morgan. That's not useful. It doesn't help us determine where prices are going to go next. To just dismiss everything as JP Morgan. And by the way, JP Morgan is not an argument. It's the name of a bank. And I get the context, and I understand that it's short for an argument, but it is not an argument, and it's not helpful to just say JP Morgan. That said, I think it's interesting because it kind of cuts both ways here. If you think that this is, if there's a giant government conspiracy to suppress the prices of gold and silver and other things, then the fact that JP Morgan got caught and got a $1 billion fine, and some people say, oh, it's just a slap on the wrist. But if they're in cahoots, if they were an arm of the government, it doesn't make sense to me that they would have got fined. If they were just following orders, then they would have got off scot-free. So I think the fact that JP Morgan did actually get fined is we should at least consider the possibility that means that they weren't working for the government and they were doing on their own. The evidence, that we have, and by the way, the evidence from the government, did any of us catch JP Morgan? Do we know what JP Morgan did? No, we have the government telling us they caught them. So we're trusting this government that we don't trust for anything else to tell us what JP Morgan did or didn't do. Understand that this is somewhat contradictory here. But accepting the government's word on this, what do we know? We know that some traders at JP Morgan spoofed these prices, did these high frequency trades. That's really different from saying, therefore, we can know for certain that there's a giant government conspiracy to suppress the price of silver around the world. The two may be related, but the one is clearly not sufficient to establish this much larger claim.
Your argument reminds me a lot. We had Bill Fleckenstein on a couple of weeks ago, and he kind of is the same mindset you are. I was somewhat in between the middle. I knew there was some manipulation going on. However, what really took me was the comments of Rostin Benham, who's the chairman of the CFTC, recently, when he said the resiliency and the market structure of the futures market was able to tamp down what could have been a much worse situation in the silver market. And he was referring to how the market kind of responded to the February silver squeeze that went on, where the price spiked. So to me, I mean, he doesn't make these comments about any market. Copper's gone through the roof. I mean, so what's your interpretation of those words from weighing the evidence kind of standpoint, if you will?
Okay, I can go there, but understand we're now transitioning from JP Morgan to somebody else. And I understand all these ideas kind of look connected, but if we're going to talk about CFTC, by the way, YouTube folks out there, a correct response to remarks about the CFTC is not JP Morgan, right? That's not an argument.
However, JP Morgan could be.
Sure. They could, but
ready for them. But we don't know.
These headlines, any headline with the word "could" in it could be true. It doesn't help us, right? To imagine what could be so. So, but I do think this is interesting with the CFTC, and it in my mind, what this links to more closely to the spoofing, but it's to other things that we've seen in history going back to the Hunt brothers. That the CME is not in the business to make silver bugs happy, or gold bugs, or copper, or anybody else. The CME runs a trading platform, and they're not interested in being frozen up. They're not interested in having their system breaking down. They can and they will change the rules if they perceive their system to come under threat. It's in the fine print. Now, if you don't like that fine print, you don't think it's fair for them to be able to change the rules, which I would agree with that. I don't think it's fair for them to change the rules on players. I think it's disgraceful what was done to the Hunt brothers, and perhaps other things more recently. But those are their rules. So if you don't like those rules, don't play their game. So if you don't like the COMEX prices being quoted for silver and gold or anything else, then don't quote them, right? That's their game. It makes no sense to say that the COMEX future prices are well, let me rephrase that. What I'm saying is, we know that they can and they do change the rules if those systems are threatened, and they're in the business to run those systems, which it's a futures trade. So I'll just leave it at that. I think that it's sufficient to say that the people that are running this show have their own agenda, and it's not the agenda that you and I and the audience would share about truth and price discovery. That's not their agenda. That's, doesn't say COMEX futures equals price discovery mechanism. It's COMEX futures. If you want to trade these contracts, here's our rules, come play our game. And I just encourage people to not play that game. And if you don't like that crooked game, don't go there. There are alternatives.
I would argue that we're not playing that game on Wall Street Silver. Our whole mantra is physical.
Right.
And our whole mantra is PSLV, which does not buy from COMEX or London even. LBMA, they take the 1,000 ounce bars directly from the refineries. When they purchase them, and they put them into the private vaults in Canada. And so the game we're playing is to capture that silver before it enters the COMEX system or LBMA, and if you remove the physical before it gets to that system, then they don't have the silver to rehypothecate into paper contracts. And
Understood.
we've
And
been
I love
gathering.
that chart of the PSLV and the SLV going in opposite directions. I
Yeah,
think
with the
that's
gorilla on it.
fantastic.
Yeah, yeah.
To
Mike
the extent
Maloney,
that
Mike Maloney
you
grabbed
and
that
this
chart.
community are doing that,
Yeah.
congratulations. I think that's wonderful. I want to see price discovery. I'm not arguing against that.
Mhm.
I'm just saying that if you play with a scorpion and it stings you, don't be surprised. It's a scorpion. What do you expect of it?
That's what I like about the strategy that sort of has developed organically in the community, and that Sprott is sort of helping us with. When Sprott went out and issued another $3 billion offering so that they could raise money to start adding more ounces. And you can see they did it right when the Silversqueeze started. You just see that chart where the holdings in Sprott PSLV just started skyrocketing. That was a direct attempt to, I mean, they're not going to come out and publicly admit it, but yeah, they're doing it on a large scale, and the retail side is doing it on a small scale to try to take ounces off the market and drain the COMEX, drain London of their ability to manipulate the market. I think that's what's going on. And actually we just saw that London just updated their, LBMA just updated their data just for April and March, and they just admitted that they fabricated their March data. I don't know if you've seen this. It's been in the past few hours, it's been all over Twitter because a few people spotted the monthly update, and there were an extra 3,800 tons in a data error for the March report for London. Almost 11% of their total reported inventory. They had an extra 11% added to their inventory for March that they just minused off in April as a data error. It was all part of their argument at the time that the market's well supplied, there's no problem, and now it's all just gone. Poof, it's gone. So, I mean, I try not to be, it's hard. It's really hard not to be a conspiracy theorist. It looks really bad for them.
Again, there's nothing wrong with thinking or suspecting, but it's another thing to say that that this happened. I just have a logical objection to that. And again, we don't need to go there. I would like to see, what I'd like to see, there's a problem with, if we want to say, okay, well, these paper prices aren't real, let's go with something real. What's real is what I'm actually paying in my local coin shop. That's the price of silver or gold. The problem is that we can't access that data. Like what I'm paying in my local coin shop is not what you're paying over there, or Mrs. Chang in China, or Mrs. Singh in India. The reason why we quote these silly paper prices is because they're available electronically it's a big market, and everybody has access to it. It's convenient. But there are starting to be other alternatives. It's interesting to me. It's been a couple of years now, but the Shanghai Exchange is physical. It's based on physical. And I'm hopeful that in time, right now, the Shanghai Exchange is kind of just, COMEX plus an adjustment. But in time, I would like, and I would expect that physical market to diverge and maybe to lead rather than to follow. And so what is happening, what the Silversqueeze community is doing, I don't know if at the end of the day, we bring down the evil overlords at JP Morgan and their friends around the world. But it does matter. It makes a difference. Every bar that's taken off the COMEX and goes somewhere else does change the balance. And I think it helps. It's a push in the right direction towards price discovery based on physical. And like I'm saying, there are new additions here. And people may not trust the Chinese. There's all this conflict and tension between the US and China now. But that number coming out of Shanghai is based on physical trades. That's not a futures contract. Those are physical trades. And if we're right about physical mattering, and if we manage to change these markets at all, then I think we'll see more importance, and more people will turn to look at what the price discovery in the physical markets is telling us. And I think that's an optimistic note going forward.
Obviously, you're bullish on silver. It's really tanked today. We have oil, even with the whole pipeline shutdown went down. How do you see all these markets interplaying with the silver and gold market? And what's your outlook for them?
Well, I'm really glad you phrased it that way. And at least threw the word gold in there also, because yes, I'm super bullish on silver. I see it as though I've been writing this as the win-win-win metal for 2021 because it has the monetary aspect, it's got its usual industrial aspects, and now with the narrative of the day, the new EV story, it's becoming an energy metal too. That's really been happening for a while, but these are the industrial and the EV are related but distinct narratives out there. And so I'm extremely bullish on silver, but it also just kind of is a pet peeve of mine. It drives me nuts when silver goes way up or way down, and people say, "Oh, what happened to silver today?" And I'm like, well, did you look at the gold price? And yes, silver has a more industrial side than gold does, and yes, sometimes they diverge a bit, but they do track, and it is primarily a monetary metal. For all the industrial uses, all these things in my mind are extras. It's fundamentally silver is the word for money in many languages around the world. Silver is a monetary metal and it moves with gold. So the question is, what are monetary metals doing usually? That's the first and foremost question. And that comes to really an enormously bullish situation. I want to preface this slightly. I won't go on too long, but I have to say, I've been doing this for a while. And I remember what happened in 2011 when the markets went into reverse, and many of us that were bullish on gold and silver then got it wrong. Some of us got it completely wrong. Some of us got it partly wrong. I don't think anybody got it entirely right. Maybe the closest was David Morgan, who was sounding the alarm in 2011 about the prices having gone too high, too far, and taking money off the table. I saw a bit of correction, possibly. Gold went up to 1900, silver hit 50 bucks. It seemed too much too quick, and that some correction was likely. But I didn't think it would be a 5-year bear. And so, mea culpa on that. And I think this is worth saying because that's the truth. And that's the last time we saw a big run up in the metals. And now, if I just sound like a cheerleader, yay, silver's going higher, it could be easy to dismiss that and say, oh, you said that last time. So I want to frame it that way because I am going to say something that's really bullish, and it may sound like 2011, but I really do think this time is different. In the first place, specifically for silver, in every bull market we've seen for the monetary metals over the last 50 years, since the last semblance of the gold standard died at Richard Nixon's bloody hands, silver has always lagged and then always more than caught up with gold. It has always done that late in the cycle peak, and it always, on a percentage gain basis, has outperformed gold. That has not happened yet this time. So if we look at the current bull market, either it's the first time in the history of free trading, modern monetary metals, modern monetary metals. It's either the first time that silver doesn't ever catch up with gold. Like if we're going to think gold is peaked and it's done in this cycle, it's now another 2011 and downhill from here. If that's true, then silver never caught up with gold. And that's never happened before. So I think that is a rational basis for saying this isn't over yet. This is not 2011 yet. And we're not just gold bugs kidding ourselves about the importance of money printing when modern monetary theory says that money printing doesn't matter, right? Mm-hmm. So that's part of it, is that this very strong pattern. I mean, this without exception pattern over the last 50 years says that silver still needs to go higher and that the whole overall monetary metals bull is not done. And then on top of that, you've got the commodity super cycle heating up, and that's clearly early stage. Okay, yeah, copper just hit an all-time nominal high, but the reasons for that haven't stopped. I mean, will copper correct? Probably. Will it go even higher? I think that's baked in the cake. You look at the supply issues there, and it's not just copper, of course. You've got all these commodities going high. And yes, I think monetary metals are special, and they're different, and they have different drivers, but they're also commodities. And the commodity super cycle is extremely bullish, and I think just getting started. And that's very different from before. So that's another reason why I'm so optimistic now. And then there's just the fundamentals. And I'm not a technical analyst, I'm a fundamentalist. And the fundamentals for monetary metals are monetary and fiscal policy. And those have never been more bullish. Even what the crazy off the charts things that we saw in response to the GFC after 2008, those are just like foothills compared to where we are now. And who knows where the peaks will be. Not only that, it hasn't stopped yet. The money printing hasn't stopped yet. The fiscal dam breaking in Washington is just getting going. Every time Biden goes on TV, we hear about another couple trillion idea. There's no reason to say, oh, well, it's just like 2011, gold and silver have peaked. I just don't buy it. On I have to look at the fundamentals. I look at what's going on now, and it's just screaming, like the Wall Street Journal itself said, screaming inflation. And gold and silver are monetary metals. I think they will reflect what policy is doing. What makes me extra bullish about silver, all of this applies to gold and silver, but the extra bullish on silver aspect is the win-win-win argument, and that silver has not yet caught up with gold on a percentage gain basis, nor yet hit a nominal all-time high, which we would expect in a major breakout like this.
Is there any way for them to stop? A lot of people think that we're beyond the point of no return. There's no way we're ever going to come back from 150% debt to GDP. There's no way they're going to ever tax enough to bring this down and back within some reasonable, normal range, historical ranges that we would find acceptable. Are we just on a path to a currency reset with the dollar at some point? I mean, I don't know how they bring this back under control.
Yeah, I get it. And I do believe that is likely the case. Do I know it? I don't have a crystal ball. How could I be wrong is another way of looking at this question, or how could we be wrong? This seems so obvious to us. We're on a train track that is pointing right towards a cliff, and the rails are dangling off the cliff. There's no switch. There's no fork in that road. How could this possibly be wrong? So two thoughts. One is, back in 2009, on the way up to 2011, I had the same conversation with Doug. It was like, is there any way we could be wrong? This looks like it. The proverbial it. This looks like what we've been waiting since 1980 for. And for a couple of years, it sure looked that way, right? Gold went up to almost $2,000. And then it went into reverse. And not just for a year, not just a little correction, for a long time, we've had to wait for gold and silver to come back up again. Arguably, it's still part of a larger pattern, but financial realism is that this is a new market and that the other one did end. Despite this, it looks so certain back then as now that the train is on these tracks and they're dangling off the cliff and there's no alternative. So that caveat said, the other thing would be like, what if the MMTers are right? I don't think so. Don't crucify me for saying this. But if we ask, how could we be wrong? Well, what if somehow, we dinosaurs don't understand that in this new world, it's possible to print money without worrying about constant. I mean, it sounds ridiculous, but we were wrong in 2011. So I have to consider the ridiculous. Or the other way of putting it, not printing money forever, but what Powell says, and he says, pretty clearly that he doesn't expect to shrink the balance sheet back to what it was before. He expects, as many mainstream economists hope, that the US can grow its way out of the situation. You don't reduce the balance sheet, you grow the US economy so that the national debt, the Fed's balance sheet are a smaller portion to that GDP. This strikes me as very optimistic thinking, and the size to which the growth needs to happen. Now, who knows? Maybe in this new crypto age, the U.S. economy will explode to some huge size that makes a few trillion here and there a forgivable sin. I'll believe it when I see it, but in terms of how we could be wrong, like how could things turn out differently? Well, maybe the new technology, maybe the new economy is more powerful than we grasp.
Dogecoin, that's your answer right there.
That's right. That's right. To the moon, man. Such wow.
Hey, speaking of cryptos, we have Bitcoin down pretty sharply today. It's down almost 5%. Yeah, it's off its all-time high, which I believe was April 14th, if memory serves me. To me, it looks like the crypto bull may be at its tail end. And if that is the case, do you see an influx into precious metals from that crowd? Because you have to give cryptocurrency that the whole phenomenon credit bringing attention to the Fed.
Yes,
Fiat currency.
yes, I agree. So I'm slightly mixed minds on this, because on the one hand, I mean, clearly there is a fair amount of momentum chasing money. The flavor of the day money goes into whatever's hot. And when Bitcoin is rising faster than gold, of course that momentum chasing money goes there, or to Dogecoin, or whatever it is, pot stocks, whatever. So yes, some money that might have gone into gold and silver stocks when prices were rising went elsewhere. I'm not denying that. But I don't think it's this gigantic game changer that a lot of people make it out to be. It's not like all the money went there. It's not like no stocks went up with higher gold and silver prices. In fact, in some ways, I think it kind of did us a favor, because the better stocks largely went up with gold and silver. And a lot of the stocks that didn't go anywhere, well, those stories had warts on them. And the ones that were clearly profitable, or the projects that clearly had the right stuff to go forward, those did get rewarded. So, there's some value there. But to your point, yes, if the whole crypto craze goes into reverse, or even just down for a while, I think flavor of the day money looks for the next flavor of the day. So that's in our favor. But more fundamentally is what you mentioned, and this goes back to my objection to why gold bugs and crypto hodlers have to hate each other. We're allies. We really have a common enemy. There's no reason for the gold and silver community to heaping hate on the crypto guys, nor vice versa, because we're both saying the emperor has no clothes. Fiat currencies are worthless. And we have to absolutely give credit to the crypto community for educating entire generations of younger people about the dangers of fiat currency. They won't listen to us old boomers, even though I'm Gen X. They dismiss those, boomer old stuff, gold and silver, fine. They dismiss it for now, but they've been educated about the dangers of fiat currencies. So if their chosen vehicle as an alternative to fiat currencies goes down or is no longer as exciting, are they going to suddenly fall in love with fiat currencies? No, of course not. They'll look around for something else. So yes, I see it as a win-win. Actually, I think cryptos and monetary metals have a lot to offer all investors as an alternative. And maybe at some future point when fiat currencies go the way of the dodo, go to their well-deserved demise, right? And the market is looking for what's the best form of money. Well, maybe that's when we roll up our sleeves and duke it out and see what the market decides is best. But right now, I'm not even worried about that. Let's take down fiat currencies first.
Another hot topic. There's been a lot of controversy around these pooled unallocated metal accounts at the Perth Mint and Kitco Metals. And you've mentioned this in recent interviews, your thoughts on these accounts. So would you like to share that with our audience?
Sure. Since we're already, we started out volunteering me for hate mail, I'll go ahead and go there a little bit deeper down that rabbit hole. First, I should say, I'm not paid by Kitco or Perth Mint or any of these guys. My business is completely subscriber based. So I have zero income from any places. And by the way, we could turn the question around here and say, are you guys paid by Sprott to plug PSLV?
Yes, I am a Sprott shill.
So, by the way, I'm not paid by Sprott.
I'm not paid by Sprott either at all.
Yeah.
I think Rick Roll's I think Rick Roll's a badass, but I'm not paid by Sprott.
I think Rick Roll is a personal friend. That's as far as that goes. We have no business relationship. There is no financial connection between our companies or any of these others. So I want to put that out there. You want to accuse me of being a shill for Kitco or whatever, because I do interviews there. Of course I do interviews on Kitco. They've got a bigger audience than I do. I look at the YouTube comments and the Twitter comments, and if I don't say exactly whatever some conspiracy theorist wants to hear me say, then I'm obviously in cahoots. I'm part of the evil empire, right?
Yeah.
Which by the way,
we've actually had that experience quite a few times with some of our guests on here, because we really try and just present everything.
I'm happy that you guys are the voice of reason there, but let me address that particular crowd, because you know what? If there is some guy in the central bank that's all dressed up like Darth Vader and he's trying to control the price of silver and gold, and he hates silver especially, you know what? He's laughing his posterior off at the gold community and all the infighting that we're doing. And if the gold bugs are now going to heap on hate on Kitco and on Perth Mint and on Rick Brule and PSLV and all that stuff, he'd be laughing his butt off at how the gold bugs have turned their hate and energy against each other instead of trying to catch him. He's the bad guy, right? And in my view, the bad guy here is not a person. It's fiat and the belief that government promises, which we don't believe somehow anywhere else. We somehow believe that government promises for these funny little pieces of paper and their digital ghosts have value. That's the real enemy to be struck at. Anyway, so the pool accounts is another case of the scorpion. All right, it's a pool account. It's not physical. It's not bullion. It doesn't even pretend to be. When you buy into a pool account, you're buying a notional piece of at least theoretically present physical, but you don't own a chunk of it. You don't own, it's not in chunks. It's a giant bar that you notionally own some interest in. It's like, if you're a major mining company and you own 10% of a certain junior company, you can't just take your 10% and go home and say, hey, I want delivery of my 10% of your junior company. Right? It doesn't work that way. It's a pool account. And okay, you can convert your pool account to a segregated or a more closer to real kind of account. But I don't think there's anything suspicious or it's not evidence of fraud that under conditions of extraordinary demand in the marketplace, that people should have a need for more time to do that. It doesn't, if you own 1 ounce in a pool account and they have to go and fabricate that for you, translate it and fabricate it at a time of peak demand, I don't think you can be surprised that that takes time. So simply, and by the way, I'm not saying it is proven that all of these accounts are on the up and up and there's nothing wrong with them. I'm just saying that time delays are not proof of fraud. Like if you go and you say, okay, I'm going to convert, I'm going to pay the fees, I'll wait, and I want my bars or my ounces in coins, or I want whatever, and they never show up, they don't show up, that's fraud.
I think one of the main criticisms that we've been sort of talking about lately is these unallocated accounts are essentially interest-free loans to the Perth Mint, for example, to fund their inventory. And not only is it an interest-free loan by the customer to fund their inventory, you're actually paying sales fees to people who sell these.
But you're also not paying. You're not paying storage fees.
Because there's nothing to store.
I needed to hold a large amount of silver, like a really large amount, and I'd have to have a vault like what you've got behind you there, Jim. That would cost me real money. So to be able to notionally at least own a large amount of silver, like my personal silver, it's bullion, it's coins. I can hold it in my hand. I've got one right here somewhere. right here on my desk.
What do you got there?
There we go.
Is that
that's a Morgan.
Okay.
Maybe it's in honor of David Morgan, but that doesn't look like David to me, so never mind.
That's a pretty nice shape one.
Actually, this was a gift from a reader in my story about how I personally have benefited from owning precious metals. Like I actually had a financial meltdown and had to feed my family and went to the wealth preservation of last recourse. And I wrote about that, and a reader really sympathized with that story, and he sent me this as a gift. Said, here's to replace one of those that you had to sell.
Oh, nice.
Anyway, so this is real. This is the real thing. I can hold it in my hand. That's what I want. There's no counterparty risk. There's nobody I have to trust. Okay, I could be robbed, but but that's not counterparty risk. This can't disappear. Its price can fluctuate, or the exchange rate. I like to call it the gold dollar exchange rate, or the gold silver exchange rate, not the price, because this is money. So the exchange rate can fluctuate, but it's 1 ounce. It's right there. It's never changing. If I buy a pool account, that's not what I'm buying. I'm buying a notional ownership. And why would I want to do that? Not for the reasons that I want to have this in my hand. That would be because I think silver's going up and I want a large exposure to that price change. I'm speculating on a price change. At that point, I don't want to pay custodial fees. I don't want to have to build a vault. I don't want to have to hire guards. I'm not in it forever. I'm in it for the price change. And a pool account is a cheap way to achieve that. And I would never buy a pool account thinking that I'm going to take delivery. I would do it as a speculative vehicle. And, you know, I just think it seems very normal. Like if any other business was like this, if like swine flu goes around and they kill off giant herds of pigs everywhere, and suddenly the price of pork goes up, and maybe there's less pork in the store, or if you have your local butcher and you want a special roast and it takes longer to get it, that's not surprising. There's swine flu, there's less pork out there. So if you have unallocated pool accounts, notional ownership, and suddenly record numbers of people want to convert that into real and take delivery, and not just delivery of warehouse receipts on the comics, but actual delivery, send me the silver. Of course, that's going to cause a disruption. And of course, it's going to take longer. You know, my analogy for this whole thing is it's like a poker game. And you put money in the pot, and the chips are not the money, they represent the money. And the chips fly back and forth. And the fact that, say there's $100 in the pot, the fact that thousands of dollars of chips go back and forth in this poker game, that's not a sign of fraud. But if at the end of the game you go to cash out and you turn it, you win, right? You win the tournament and you go to cash out and you turn in your chips and you say, okay, where's my $100? And it's not there. That's fraud.
You mentioned physical bullion. How else are you investing right now? It just seems like a very perilous time to be putting money out in the stock market or wherever.
Yes. Well, again, this isn't even an investment. This is savings. Like I'm not buying this or gold because I think the price is going up. I'm buying it because it's metal. It has value. And whatever happens in these perilous times, it will have some value. And thousands of years of history says that, you know, come heck or high water, I will be able to liquidate that if I have to. And my personal experience says that's true. So as a speculator, though, I wouldn't even buy a pool account to speculate on higher silver prices or gold prices. Why would I do that when I can get more leverage on the stock? If there's a silver exploration company or even a silver producer, one of the larger companies, the leverage those give us to the underlying commodities is well documented. You see, even if you take the GDX, which I'd never buy the GDX, I'd rather pick my own stocks. But you take a large index like that, and you see the price of gold goes up 1% on a week. The GDX will go up 4 or 5%. It'll multiply the leverage, and that is such a solid relationship over decades. So if I'm a silver bull, you know, why would I speculate on a pool account that would give me the minimum? And okay, maybe the pool account can't go bankrupt, but I'm a speculator. I'm looking for gains. So the stocks are how I'm looking for that. If the broader question is, what's the safest portfolio design in these turbulent times? That might actually be above my pay grade. I'm a metals and mining guy. I'm not a CFA, and you know, I'm not a private wealth manager. I'm a speculator, and I'm extremely bullish on monetary metals. And my way of playing that is not pool accounts or the metals themselves. That's savings. Physical is savings. But the way I'm playing that is looking for the best gold and silver stocks. And I'm particularly looking for more silver stocks, which are fewer and harder to find that I can really get excited about. And because I'm at a stage in my life where I'm still looking for maximum gains as opposed to wealth preservation, I'm definitely focused more on the early, on the smaller company side. I'm looking at exploration plays, looking at mine builders or juniors that have cash flow and exploration upside much more than the larger players.
You know, I actually feel exactly the same way. I've got a certain amount of physical silver, but I'm mostly in the miners right now, gold and silver miners, and I have like 8 different exploration junior miners that I'm into also. And a lot of our audience is the same way. We play both. You know, you have your physical for safety purposes, and if you believe the underlying premise, yeah, you're in the miners too.
I'm not saying that's safe. I'm not saying this is the safe way to protect yourself from the volatility. I'm just saying, like as you said, Jim, if we're right, if all you silver bulls out there, if you are right, and you want to make money on being right, then the way to make the most money on being right is on the stocks, not the metals themselves.
And there's the big producers, the Pan American Silvers, the First Majestics, and then all the way down to the little exploration companies. We just interviewed Abra Silver, John Miniotis. That stock's just gone from 5 cents to 71 cents in the past year. So
There you go.
I mean, just an explosive potential because they're just so massively leveraged to the underlying metal price. Well, thank you very much. This has been a great discussion to have, Lobo. We'd love to have you back on in the future as the market develops. You've got a very independent, we'll call it a very independent set of viewpoints that we like to bring to our audience, just so we're not an echo chamber. And we appreciate you joining us and sharing that.
I want to say hands down, I'm very bullish on copper and uranium and gold and silver as well. But my highest priority right now is finding great silver stocks. I'm super duper bullish. The win-win-win, and maybe even a fourth win if medical use of silver comes online. It is my top priority right now is to find more great silver speculations. So you may disagree with me about some of the things I've said.
Oh no, I don't mind disagreeing. I disagree with lots of people.
Do you actually suggest stocks on your website for members? Is that part of the service that you provide? Are you looking for the members?
Well, thank you for asking that. I have 3 services. There's a free educational service, and there's tons of educational material. And by the way, if you sign up for our free weekly digest, we do not spam you. You get 1 weekly email. That's it.
Mhm.
And it's free, and it has original content. But to answer your question, I have 2 paid services, and one of them, no, it doesn't have anything even remotely resembling a recommendation. It's like Consumer Reports. It has a growing database, over 400 companies so far that have been requested by readers. So people say, what do you think of XYZ silver company or copper company or whatever? And I'll do my due diligence and I'll give them a summary, pros, cons, and my take on it. So there's no recommendations there. It's just my evaluation of your stocks.
Mhm.
The Independent Speculator itself, that is built around my personal portfolio. It's not a theoretical or a model portfolio. It's what I'm actually doing with my own money. So can't get a better recommendation than that, I think.
Well, I'll put the link in the description of this video so that people can go take a look at your website and sign up if they want to.
Well, thank you.